Hey everybody, welcome to Momentum Monday, and we're so excited that we have one of our friends and our FYR Partners Community strategic partner, United Land Transfer Services. That's a mouthful. United Land Transfer Services, and our attorney for ULTS, Elizabeth Hurtubise, is here today, and she is awesome. She has been Elizabeth. How many years has it been now that you have been in this business?
Oh boy, I'm dating myself.
I know, right?
So I've been a real estate attorney for let's just say over 30 years.
There you go.
Licensed in New York, Pennsylvania, and New Jersey. And for about 5 years, maybe 10 now, I've been also a title agent in Pennsylvania and New Jersey. And for the last 5 years, have been managing title agencies across Pennsylvania and New Jersey.
That's
And
amazing.
for the last 2 years, have been working with Dave and Kristen and the fire team with United Land Transfer, which was a um, title company really founded on the same principles that all of you EXP agents use, which is let's give our home buyers the best experience they can possibly have with exceptional service. And in most states, you can't really negotiate what your title insurance premium is going to be, but you can certainly guide your buyers to the best services to make sure that you close on time and that your buyers know exactly what to expect at the closing table so there's no surprises. And that's the service that we strive hard at United Land Transfer to provide.
Awesome, which is why we partnered with you. Um, so it's so great. I'm going to hand over the reins to you, but I just, I wanted everyone to understand that when you're learning from Elizabeth, you've got someone here who has been in the industry for a long time, who has, seen the good, bad, and the ugly. And when you have someone guiding your clients through, that whole process, which a lot of people they kind of feel like they're at the finish line and their eyes start to gloss over. And there's so many critical components that happen during that part of the transaction that's the part that really protects them. And a key part of our job as realtors is to protect our clients, all right, and to be the best option for them through our strategic partners, to make sure that this purchase that they're making, or the sale that they're in selling their home, works out the best for them, and that they're protected and that they understand, what's happening out there for this key investment. So, having an experienced guide along and their team to do this is super key. So, Elizabeth is going to take you through the stuff that you need to know as a realtor, to really understand what it's all about. I'm going to hand over the reins. And, Elizabeth, we are so grateful for you and everything that you do. And we're grateful for you coming in today to share this information with our group.
I'm excited to share some information for sure.
Awesome. Kick it off.
Right. So, as the slide shows, this is the reasons why every home buyer needs title insurance, and it's just the basics. And I know I see that there are some very experienced realtors also joining in, and that's great. If you've got any war stories, jump in and share them. Um, but I was taken aback by a realtor who we had done, I don't know, maybe a dozen closings with, and she's been in the industry for 5 or 10 years, and she called and asked if we did title insurance. And it occurred to me that she had no idea that we had been giving title insurance to her home buyers for 2 years, 3 years, done a number of settlements with her. And I think that she was confused between we're settlement agents, but we're also title agents. And they just kind of brought home to me that we all go about our day and we do what we know what we can do, but we sometimes are reluctant to ask questions on things that we think are very basic. So we don't ask the question. And I just wanted to kind of start with the very basics so that people understand that a title agent, a settlement agent is offering title insurance. It is very rare that a title agent or an attorney will handle a settlement without getting title insurance because it's so important. But it does happen, and it is an option to not have title insurance when you close on a property. Uh, but I think as a realtor, it's your responsibility to educate your clients on what title insurance does and why it's important not just to have a settlement agent, but to also have a title agent who is going to be looking at your title and cleaning it, scrubbing it, protecting your client. And so I'm just going to start with the basics. We'll get into, as I present more, we'll get into more of the details on some of the hairy things that you'll run into as a realtor when you have estates, when you're dealing with divorces, when you're dealing with foreclosures and quitclaim deeds. There's a lot more to title than just the basics, but just we'll start with the basics. We'll give you a good foundation of what title insurance is and why your client needs it, and give you some pointers on how to explain to your client why they need it and why it's important. Um, Title insurance protects your largest investment. You have insurance for everything else that's valuable to you, your life, your car, your health, your pets. You really do need to protect what is basically, for a lot of people, the largest investment they'll ever do. So it protects the actual ownership of your house. It reduces your risk. There's so many risks out there now that we didn't have 15 years ago. The biggest one right now that title companies are dealing with is owner-seller impersonation. This doesn't necessarily, well, it protects your buyer, but it also protects just generally the general public knowing that this is a risk. And if you haven't heard about this latest fraud, what it basically is doing, criminals are checking public records. So all of that information is available basically on your county website, and they're looking for properties that are vacant, that have no buildings on them, or are owned by an LLC. And they create a for sale by owner, and they try to entice a buyer to buy the property from them. And they pretend that they are the owner. So if they see in public records that the owner's an LLC, they create an LLC document that says they are a member of that LLC, and they present that as authority for them to sell the property. They will also, and that's a hard one to fight, by the way. I mean, you really need to go back and check all of the LLC docs that have been recorded with the state to see who the members were and how that member became a new member, because that's a red flag. If it's suddenly, 2 weeks before they list a property, the LLC documents have changed. They'll pretend that they are that person that owns the property. So they'll say they are Mr. Jones and they've owned the property for 40 years and it's free and clear of any mortgage, which is also important because they don't want to have to deal with the mortgage payoff. They want all of the proceeds themselves. They'll pretend that they're Mr. and Mrs. Jones and they're selling the property. So if you present a buyer to that for sale by owner and you never meet them, you see the property, but you never meet them, all communication is via email. Those are all red flags that once that buyer goes to get title insurance, we're going to fully investigate to make sure that Mr. and Mrs. Smith that you're dealing with are the Mr. and Mrs. Smith that own the property. And that requires us to do a lot of investigation. That all of this goes on behind the scenes that you don't even see. Your buyer is not aware that we're checking the public records. We're checking signature documents. We're looking at an old mortgage from 1970 that Mr. and Mrs. Smith signed, and we're checking to see if the signature looks like it matches the signature on the agreement of sale. We're looking to see what the address is for where tax bills are being sent. Does that match the address on the agreement of sale? There's a lot of work that goes into clearing the title and making sure that you are dealing with who you think you're dealing with. And it is amazing how often we get these scams coming into our office and we raise the red flag and call off the deal, because it could get to the point where if you weren't getting title insurance and your buyer was saying this is such a great deal, and it usually is a good deal because they want to get you to buy it quickly. If they buy it without title insurance, they don't own anything. They've given their money to criminals and there's no recourse. If they buy it with title insurance and we for some reason miss that, the recourse is they can go after the owner and or the fraudster and try to get that money back, and the title insurance company will pay for legal fees for that. It's been going on for 10 or 15 years. We're probably getting now into a cycle where they're going to flip those properties quickly, and it could be 2 or 3 owners back that occurred, and we're going to be looking back and checking to make sure that that title is free and clear. We check outstanding mortgages and judgments. We look for liens against the property. We look for any pending legal action that the property is subject to that could affect the buyer. We look for unknown heirs of a previous owner who's claiming ownership of the property, which is very important when you're dealing with an estate that you make sure if you're the buying from an estate that all of the beneficiaries of the estate are signing off on the deed because you could get, two siblings that cut out the third sibling and you never even know there was a third sibling and the two siblings are selling the property, they sign off on the deed, and after the deal is closed, they discover that there was a third sibling that was kind of on the outs with the two siblings, and now they have a claim for the property, and that claim is against the property, and the title insurance will cover that. That happens a lot, as you can imagine. When the parent dies, that's um, a lot of times the whole family falls apart on that. And one of the things that the title insurance company does is we'll go back, we'll read the obituary, we'll scrub social media to see if there was an outstanding heir. We'll look to see if there, check birth records to see, how many children did they have, check death certificates. We'll contact the attorney that prepared the will and ask them pointed questions about that. The flip to that is also is as you're working with the buyer, talk to the seller agent and ask them, how did you get this listing? How do you know these people? How many children were there? You can ask all of these questions while you're doing, an inspection or a walkthrough, and see what the selling agent has to say about the family and where they are. Sometimes you can get good nuggets of information, and if you find that, you want to take that immediately back to the title company and share with them that there may be some more investigating that needs to happen. Um, One of the big issues that they ask is what does title insurance cost? Title insurance cost varies from state to state, but it's generally between 0.5 and 1% of the home purchase price. The title insurance premium is paid one time. It's paid upfront at settlement. It'll be on the settlement sheet what the premium is. In some states, the rate is set by statute and it can't be negotiated. Pennsylvania is one of those states. Virginia is not is a state that allows you to do it. North Carolina allows you to negotiate the premium a little bit. So you can shop a little bit for the premium. You need to be careful because you kind of get what you pay for. One of the new tools that's coming out that if you're doing Fannie Mae closings is that they're allowing you to close on an attorney letter where the attorney says they've reviewed the title and they think the title is clear. The issue with that is the attorneys are not doing the amount of investigating that we do. It's just not cost effective for them to do that, and they're not backed by an underwriter. So when you're looking at what title company do you want to recommend to your buyer, who the underwriter is very important. There are 4 main underwriters that do most of the underwriting in the United States: Fidelity, First American, Old Republic, and Stewart. They're all very good, solid backed underwriters. If there is a claim, they have the backing to pay that claim. And that's important to know that your title company is being underwritten by a national underwriter who can back up the claims. Because a claim could be as much as the value of the house, and it goes up to the value of the house. So what does title insurance cover? Any property survey errors. Some states it's common to settle with a survey. New Jersey is one of them. Pennsylvania is a state that does not require a survey, and it's not common to have a survey. If there's a boundary dispute, if there's a shed on the property, if the fence isn't properly located, if it's a shared driveway and the garage is on your property to the shared driveway, if there's a building code violation by the previous owner, and this is something that as real estate agents you see when you're doing the property disclosure agreement, when you're working with the seller and you're saying what's been done on the property, what did you do, what do you know about the property, one of the questions is always, and did you get building permits when you did that deck, or you added that bathroom in your basement, or you upgraded the electrical unit? Did you get a building permit for it? Um, Title insurance can cover you if after you've bought the property, the building inspector knocks on the door and says, "Hey, we don't have a permit for that deck. You need to take the deck down." Title insurance will come in and cover the cost of replacing the deck if that needs to happen, or work with an attorney who can work with the building inspector to make sure that you're not out of pocket for the cost of that. Title insurance covers if there's conflicting wills. So you have a will that has three siblings, and then suddenly there's a will with only two. Do they conflict? Which is the right one? Title insurance covers that for that unsuspected heir. Another big issue is claims by an ex-spouse who didn't sign off on the sale. This is another form of fraud, but it's also sometimes, a couple's married, they divorce, they don't address the property in the property settlement agreement. We don't have anything really to say. Does the spouse who's no longer in possession of the property have rights to the property? That varies state by state, whether the spouse has any rights to the property if they're not on the deed. So if a spouse buys a property, it's only in their name. They get married, they never put it in the spouse's name, they get divorced. In some states, the spouse has a claim to the value of the property that increased during the time that they were in possession of the property, and that needs to be addressed. And if it's not, and the spouse comes back and says, "You sold the house and I had a marital interest in it," that's a claim that title insurance will cover. If there's any forged documents. So if you go back to that same scenario, we had a case here in Pennsylvania where the husband was selling the property. It was a marital property. It was in the name of the husband and wife. He brought his girlfriend to the settlement. I don't know whether the notary didn't ask for title for proper ID, or she didn't have any proper ID because she was not the wife. She pretended to be the wife. She signed the deed as the wife, and it was notarized. The deal closed. The deed was recorded. The wife found out, and the agents and the notary were investigated, and criminal charges were brought against them for theft. That's something that that buyer had title insurance, and they covered the cost that the buyer had. Liens from any contractors, any taxing authorities. A lot of people don't realize that your HOA fees are a lien against your property. If it's a municipal lien, so if the municipality is providing water or sewer, you haven't paid your water and sewer bill, that's a lien against the property. Your buyer inherits all of those liens on the property. So any amount that the seller didn't pay that are outstanding, if they're not paid at settlement, your buyer just bought that sewer bill, that water bill, that HOA fee. They have to pay that. It's a lien against the property. It also covers if there's any encroachments or boundary disputes again, and any improperly recorded documents. So if the title insurance company or the lawyer handling it makes a mistake in recording those documents, they'll fix those documents, or they'll pay to have the documents fixed. Again, protects against deed fraud. We're doing the ID verification. We're checking public records. We're comparing signatures. There's an amazing amount of fraud going on today. I'm sure you've all heard about the wire fraud that's going on. There's just, the amount of information that is available for public consumption has really fueled the ability for people to pretend they're other people, and to redirect funds, to hack into an email and give new wiring instructions. And there have been a number of cases where money was wired to the wrong account. It was not wired to the title company. And the agents have been sued, the title agents have been sued. This is something that wiring is a very effective way to get your funds very quickly, and we wire all of our payoffs. We try to wire most of our proceeds. We accept incoming wires for all of the amounts needed to close, but we are hyper vigilant on making sure that we send the wire instructions, yeah, in a protected format, and we let everybody know on our email taglines and any conversations that we have with them, we are not changing our wire instructions ever. And you always still need to call a known number to make sure that you're wiring your funds to us. So when I get a wire request and they want me to wire money to um, a bank, we call the bank and I call a different number. I don't call the number on the wiring instructions. I look up the number of that bank and I'll call the bank directly on a known number instead of using the number in the email to make sure that we're wiring our money to the right location. Super important to just wiring is great, but you need to be careful with it. And it is safer, I think, at this point than writing checks. I have had no wire fraud committed against me, and I have had at least 5 checks that have been intercepted. They changed the owner or the beneficiary of the check to themselves or some other agency, and they submit it to the bank for payment. And I've caught them all, but it amazes me how often people are finding checks and washing them is basically what they're doing. And they're doing it from checks that they get in the mail, and they're doing it from checks that people have lying around. So when if you're holding an escrow amount and you've got a check for that amount, you deposit the check, that check needs to be shredded as soon as you know that those funds have been hit in your account. Because cleaning people are going through, other people are going through, recycling people, they're going through, they're finding the checks and they're just changing them and resubmitting them. One change in the digit on the check number and the bank doesn't know that that's not a good check. So there's just so much out there that we need to protect against, and just being vigilant on that is super helpful. Um, so, again, it's a one-time fee. It's a great value. I was on the phone I was visiting a friend, and her son and his girlfriend called, and they were buying a house, and they got um, the closing disclosure from their bank. And of course, on the Alta, if you've looked at it, or the CD, it'll say owner's insurance optional. I don't know if you've seen that. And then your buyer comes and says, well, I don't need title insurance. This says it's optional. They were buying their first home and didn't know anything about mortgage companies or lenders or title insurance. They knew nothing. They were babes in the woods. But today's first-time home buyer, they're buying $500,000 houses. The first-time home buyer, when they would be buying, $125,000 or $250,000 home, those days are gone. Especially in this market in our area in Pennsylvania and New Jersey, a first-time home buyer is spending $400,000 to $600,000 to buy a home, and they don't know anything about how they can best protect themselves. So it's super important that this little increase in their cost is huge in making sure that they are not subject to any of the claims that we talked about. I think I have a slide about the difference between, let me just check. I don't. Oh no, here it is. So that raises the next topic, which is, well, there's the enhanced policy versus the standard policy, and then there's the lender policy versus the owner's policy. So I'm going to go over the enhanced policy versus the standard policy first. In our market, it's called the enhanced policy versus the standard policy. I don't know, honestly, in other markets what it's called. Have you all come across the difference between the two types of policies? Or raise your hand if you are aware that there's two different types of owner's policies. Yeah? Okay. So your basic title insurance covers claims that other parties own the property, mistakes or errors in the public records, liens or encumbrances, fraud, forgery, or other wrongdoings, unknown heirs claiming interest in the property, and gap coverage. So I went over all of the top five with you already. I'll just mention gap coverage because you may have a lender or a buyer that's savvy enough to ask you if the policy covers gap coverage. Gap coverage is what covers you from the time you buy the property. So closing date is June 2nd, you're closing today. That deed may not get recorded in some states until maybe June 15th. In Virginia, the deed has to be recorded before you can disperse. In other states, it could be 2 weeks, it could be 3 weeks. For a while in Pennsylvania, there was a county who had been hacked and their systems had all been torn down and taken apart by the hacker, and they were being held hostage. That county got so backed up on their filings that it took 6 to 7 months to get a deed recorded. The city of Philadelphia is better now, but for a while they were so bad that the Association of Title Agencies had to threaten lawsuit against them to get their deeds recorded. So that gap coverage covers you from the day you buy to the day that the deed is recorded. Because most states, it's the recording that counts as your ownership. So until the deed is recorded and as a matter of public record, anybody can intervene and record a deed between that time in that gap, and that can effectively erase your rights as the property owner. So the gap coverage is important in a state that doesn't require that the deed be recorded before disbursement or that day. So it's important to know that that's out there and something that can be and should be purchased. So the enhanced insurance, which is just a fraction more, covers so many more items. So it's everything that's in the standard policy, plus if there's any zoning or building permit issues. So again, think back to that deck that didn't have a building permit. Or if you're buying a property that you think is a daycare and the seller has told you it's zoned for a daycare and you're going to use it as a daycare, and then you find out that it's not zoned for a daycare. Enhanced title insurance coverage will protect you against being held in violation of the zoning because you're operating a daycare. If there's any covenant restrictions or corrections that need to be made, it'll protect you against that. If there's liens against the property, if there's a lack of access to the property, if there's any supplemental tax assessments that don't show up at the time, so they're not cleared at the time of settlement, but they come later after closing. That is not to say that it covers if you do a lot of new construction, when your client buys a new home, they're paying taxes basically on the land value because the house hasn't existed previously and hasn't been assessed. There is an additional assessment that your buyer will get a bill for that covers the amount of value of the land versus the value of the $1 million home that they just bought. It doesn't cover that, and that is something that the title insurance company should always remind your buyer that once the deed is recorded and the municipality and taxing authority know that the value of the property is no longer 30,000 but is $1 million because of the 5-bedroom house that was built on it, they're going to send them a tax bill, an additional tax assessment to cover the time that they owned the property and it was at the higher value, and that needs to be paid. It also is very rarely is that included in the escrow that the lender holds for taxes. It's an additional assessment that needs to be paid. It's not typically paid by the lender. It needs to be paid by the buyer. When the lender is doing their escrow for what they're going to escrow, they talk to the title company and they say, what are you saying that the taxes are going to be now that the property has a home on it? And we'll give them a value that we think based on either we've done 5 other homes in that development or we've talked to the tax assessor, and then the lender will typically take that and add another 5 or 10% to it to make sure that they're covered and they have enough money to escrow to pay for those taxes when they come, but they will not pay the additional assessment. So that's something that you need to make sure that your buyer knows. Again, the enhanced will cover encroachments of any structure on the property and encroachment of your buildings onto your neighbor's property. So if you think the garage is yours and it's on your property, and then your neighbor knocks on your door and says, pardon me, but you're going to have to take down the garage, it's on my property, the enhanced title insurance coverage will pay for that and cover your attorney's fees and in dealing with the loss of value for no longer having a garage on your property. So let's talk a little bit about the owner's policy versus the lender's policy. Um, all lenders require a lender's policy. The owner's policy is, as it says in their CD, the owner's policy is optional. So the lender's title insurance cover only covers the loan amount. So if you're thinking that you're typically your client is putting down 10 or 20% of the sales price, the loan amount is less than that because that's obviously they're at 70, 80, 90% of the sales price. That's all that is being covered. The lender's title insurance is required by the lender whenever there's a loan. It only protects the lender's financial interest in the property, and it is only for the duration of the loan. So if you, let me see, I'll let somebody in. If you're in today's market, everybody that bought a house in the last year is watching the rates. As soon as the rates go down, they're going to refinance. Maybe they'll cash out, but as soon as that lender no longer has that loan, their lender's title insurance is no longer, there's no coverage for it. And as you refinance, if you refinance for 50% of the property, then the lender's coverage is only for 50% of the value of the property. So what is the lender's financial interest in the property? An owner rarely can ever take advantage of the lender's policy. The lender is only concerned about getting their mortgage payments. So as long as their mortgage is being paid, they don't care that there's an encroachment on the property. They don't care that you're dealing with a building permit issue. They don't care that there's an encroachment issue. As long as you're paying your mortgage, the lender is happy and there will never be a claim. The lender's claim will only come to the underwriter saying there was a failure in title and our borrower no longer owns the property, or the borrower is that it's typically they're not, or there's a significant diminution in value on the property and we're no longer collateralized the way we thought we were. So the lender's policy doesn't really protect the owner, and the payment that the underwriter makes is going to be to the lender. They're not making a payment to the owner. So if you don't own the property, the lender makes the claim against the underwriter. They claim, 50% of the value of the property. The underwriter is only paying the lender, and you still don't own the property and you have no coverage. So thinking that the lender's title insurance coverage is enough and will protect your buyer is wrong. It will not protect your buyer, and your buyer cannot make a claim. And their underwriter is not necessarily going to fix the problem to the satisfaction of your buyer. They're going to fix it to the satisfaction of the lender, and all the lender wants is the money. The lender doesn't care that you don't have a deck or a garage. They just want their money. So the owner's then is for the full amount of the sales price or the market value. If the property is being sold to maybe between a family member and it's less than market value, you can pay for owner's policy up to the market value of the property. It protects the owner against any loss due to the undisclosed liens, the boundary disputes, encroachments, or fraud. It covers the cost of an attorney to defend any claims, and it lasts for the duration of the ownership of the property. So as long as you own the property, if the property value goes up, if the property value goes down and there's a diminution in value, the owner's title insurance coverage will cover that amount of it. So I was at a closing with a first-time home buyer. It's just my favorite type of closing to go to because they're so excited. And as I was talking to the young man that was buying his first home for over $500,000, and it's amazing that that's what you have to pay to get into the market these days. I said to him, because you bought owner's title insurance coverage, if you have any claim at all, if you have any issues with your neighbor, if you have anything that you suspect impacts the value or the use of your property, call the underwriter. This is not like car insurance or homeowners insurance where if you make a claim, your premium goes up. You've already paid your premium. There is no downside to calling the underwriter and saying, I think the my neighbor's fence is on my yard, or I think my neighbor is saying that my garage is on his yard, or I'm getting notices from the water company that bills weren't paid. Anything at all that affects your property, call the underwriter because the underwriter will tell you if there's value in it or not, if there's a claim, and if there is a claim, they'll fix it. And we try really hard to fix everything before closing. But if something comes up after closing, particularly if it's something that we can fix, we fix it immediately. If there's been an error in the deed, we'll re-record the deed. We'll fix whatever the issue is. If the tax ID number was wrong or the address was off by a digit, we're human and mistakes are made. We don't even let it get to the underwriter. As a title agent, we're fixing that as soon as we're aware that there's a problem. We're going to fix it and take care of it. So that is a topic for another day. I guess I have 15, 20 minutes left. Does anybody have any questions about title insurance? Go ahead, Ivy. You're on mute.
Okay, yeah, I just
Good,
understand.
perfect.
Um, if you when you refinance and say you didn't have any title insurance and the house is paid off, and then you get a mortgage against it for a portion or whatever, can you then get title insurance?
Not once you've owned the property. You have to get it when you take title. So when you own the property is when you have to get your owner's insurance.
What if there's a change of the title a little bit, like taking someone off, buying
Then
the
you
other
absolutely can
off?
get it at that point.
Okay.
And I recommend that all the time. I have, and I'm sure you probably have seen this as well, but I have a lot of people who come to me and say, I want to give the property to my children. And I don't have a mortgage on the property and I don't have title insurance for the property, but I want to give it to the children. Will you do a deed for me? And I typically will refer them to counsel, not me because I don't represent them. I represent the title company. I'll refer them to counsel, but I'll say to them, your children should get title insurance at this point. When they're taking title, they should get an owner's policy for the fair market value because that will protect them in the event that there's an issue with the deed from you into them, or if there's, you're giving it to two children and the third child comes back afterwards and claims that there was fraud or undue coercion, it will protect the two that you're giving it to. So when there's a change in title, you absolutely is a good time to get an owner's policy. Priya?
Hi, Elizabeth. Thank you.
Hi.
My question. I have two questions. One, when you are explaining when we have a title insurance and suppose the deck was not approved and they have to rebuild the deck, so it's going to cover the cost. Is it going to cover the cost rebuilding it or removing it?
It will cover the cost of either, depending on what the solution is. So if the building inspector will allow for a permit to be issued and it to be rebuilt, it will cover that. If there's no way it can be rebuilt because it's never going to get approved, it's too close to the setback lines and you can't build a deck there, it'll cover the diminution in value. So if the house was worth $350,000 because it had a deck and now it's worth $320,000, it'll cover the difference between that.
Oh, okay. Sounds good. And second thing, when we were saying we're gonna they compare the signatures and everything. So now these days, most of the signatures are electronically. So how that part going to be?
We would ask for a copy of their driver's license. We'd look at the signature on their driver's license and compare that to the signature on an old mortgage. Um, yeah, it's tough because those fraudulent people really rely on technology to be able to commit the fraud. It's so easy now, particularly, COVID taught us all how not to have to be around anybody, right? You never have to see anybody. So they take advantage of that. So they're docu-signing documents. They'll tell that they're out of the country, they're out of state, they're unable to attend. Um, they'll, if we're sending them a deed package, we'll and we're already suspicious that something's going on, we'll tell them that they have to go to our notary, that we'll select the notary in their area to get the documents notarized because we're going to vet that notary and make sure that the notary is also going to be checking their driver's license against their signatures, against their picture to make sure that they are who they say they are. And we just had a notary arrested in Philadelphia that had fraudulently signed off on over 30 deeds.
Oh,
You're only as good as, there's a lot of notaries out there that can be brought or bribed. We are very specific about who gets to notarize our documents, and we want to make sure that it's somebody that we vetted.
sounds good. Thank you so much.
Any other questions?
I'm good for that. Thank you.
I was explaining to the couple that were buying the house about the lenders and owners policy. Um, and they didn't know what I do. Their mother just said, "Oh, hey, I want you to talk to my friend about title insurance." And so I gave them basically this seminar in a 5-minute version. And at the end of the call, the son said to me, "Wow, this was really helpful. You should sell title insurance." I said, "Oh, I do." But even if I didn't sell title insurance, I would definitely tell you that this is something that's important to do. There's a lot of work that goes into title insurance that you never see. You see the settlement notice go out, you see the alta, the settlement sheet being balanced, you get the clear to close. I think a lot of title or real estate people show up at settlement, and they think that that's what we do, that we disperse the money and we go over the loan documents. If the loan officer's not there, we tell them what's going on. What they don't see is all of the work that goes into clearing title. And these days, that is just so much harder because of the fraud element. But there's a lot that goes on that people don't realize. And I felt so bad a couple of weeks ago. We had a seller. It was an older couple. They'd lived in the house for 50 years. They didn't have a mortgage. We thought, oh, okay, this is pretty easy. This will be an easy title to clear. But when we did the title search, there was a judgment on a mortgage on the property that was 25 years old. They didn't even know they had it because what they had done was 25 years ago, they replaced their windows. They got all new windows. And the window company said, "Hey, we'll finance the windows for you." They thought that was a great idea. They financed the windows, and in the process of financing the windows, had given the mortgage company, or the window company, a mortgage on their property. So the mortgage never got satisfied. The windows got paid off. They paid for them. The window company went out of business. And now we have a 25-year-old mortgage on the property that they didn't even know they had. Because, I mean, you've sat through those sales pitches that the roofing companies and window companies do to sell you their product. They didn't even realize it. I think they probably knew they had signed a note, but they did not realize that there was a mortgage. And we couldn't find the company. They'd gone out of business. You make the decision from an underwriting standpoint that, yeah, we'll insure over that, but it took a while to get everybody kind of on the same page that this was something that we could do. We had to get copies of all their canceled checks and make sure that they had in fact paid off the windows so that we were confident that the window company or some iteration of the window company wouldn't come back to them. but that's something that's done ahead of time that we've cleared. We had another closing where we did the search, and the search picked up a lot of tax liens on a state level, but the IRS had filed their tax liens in the county, but they filed them in a different format than the searcher looked for, so the searcher missed. And they ended up having, $30,000 in tax liens against the property. And the day that the buyers moved in, the IRS agent called them rather nastily and said, "We own your house because there's these liens on the property." Then the title insurance underwriter who had done the search immediately paid that amount and satisfied the tax liens, and then went after the seller to try to recoup the amount of the loss of the taxes. But had that buyer not gotten title insurance, they would have stepped into $30,000 in federal tax liens, and the IRS would have foreclosed on them. So there are so many stories out there where title insurance saved the day, and there are so few stories where title insurance wasn't helpful and didn't cover it. There aren't a lot of claims as compared to like a homeowner's insurance or car insurance when you look at the claims ratio, but it's mostly because of the work we do ahead of time to make sure there aren't claims. And then if there is a legitimate claim, it's paid for the most part. But the work that we do ahead of time, which is why a lot of times if you're working with a title company that's doing their job, they're asking a ton of questions and they want a lot of information. And it's because they want to protect to make sure that the buyer is buying everything that they think they're buying. So I know sometimes we can be annoying when we're asking a ton of questions about, are they divorced? Are they married? What's their, all the questions that we ask, and how are you taking title, and what are you, are your buyers married? Those are all questions that we need to know because we need to make sure that we are giving them the title that they think they're buying and that they understand what their rights are as a property owner.
Does it make a difference on the title insurance how it issued if they're not married?
No, it just isn't. We want to make sure that the title insurance and the deed match how they want to take title. So in most states, when you're married, you're automatically taking as joint tenants. If you're not married, then you have the choice of taking as joint tenants with right of survivorship or as tenants in common. That makes a difference with how the property is devised in the event of a death of one of the partners or one of the members of that's on the deed, but it makes no difference with regard to the title insurance as long as the title insurance is in both names. So you want to make sure that if you're taking as tenants in common, the title insurance has both names on the property. If you're taking as husband and wife, the title insurance will say, John and Judy Smith, husband and wife, or it'll say John and Judy Smith as joint tenants with the right of survivorship. So we want the title insurance to match the deed. And in several states, the mortgage also has to match the deed. So if you are on the mortgage, you need to be on the deed. If you're on the deed, you need to be on the mortgage. That is not true in every state, but it is true in some states. So it's important to know what that rule is in your state as to whether or not you have to be on both. And then you want your title insurance to match that. Good questions. It's risky out there. It's getting riskier by the day, but I think we offer a really valuable service. And one of the things that I think is really particularly good about United Land Transfer is, the fact that I'm an attorney, my title agents are all licensed title agents, but if there's an issue, I'm able to talk to the underwriter counsel and resolve it, like the window issue. We were able to really drill down and discover what the risks really are and then mitigate those risks as best we can and then decide it's a risk that's worth taking. So having that ability is really important as well. And dealing with really good underwriters who understand what we need to do to get the deal done. Because at the end of the day, that's the whole reason why I went into real estate law. It is the least adversarial of all types of law. You know, I want to buy, you want to sell, we want to make a deal, everybody goes away happy. That's rare in all other aspects of being a lawyer. You're not going to find that in a personal injury or criminal case. It's real estate is, for the most part, very non-adversarial. We all want the same thing at the end of the day. Anything else? All right, well, we've 6 minutes left, so I'll let you go. My contact information is widely available. It'll be part of this recording. I'm happy to walk you through any questions you have on title insurance. If you want, Dave can make these slides available. All of my underwriters, we have First American, Fidelity, Caddick, Stewart, and Old Republic. All of them put together marketing information designed for you as realtors to explain what title insurance is to your buyers. If anybody wants that, shoot me an email. I'll send it to you. I'll brand it with whatever branding information you want to have. If you want to, send me a headshot and your card, I can brand the information for you and send it to you. You can put it in your buyer consult package and anything that I can do to make it easier for you to explain it, I'm happy to do that. Okay, I'm gonna stop the share, and I think Dave and Kristen have checked out, so we'll let it go at that. Also, if there's any other specific topics that you want covered in my next seminar, shoot me an email or text or get in touch with Dave or Kristen, and I'm happy to cover those as well. Next up on my list is to go over the ALTA statement in detail and explain it to you so that you can explain it to your clients. And we'll do both the buy side and the seller side. So whichever you've got going on, we'll walk you through what you can expect your seller to pay, what you can expect your buyer to pay, and what all of those charges are and what they're for, and how they get prorated. So any other topics that you have, shoot me a text, let me know. Okay?
Thanks, Elizabeth. Awesome stuff.
Great. This
Thank
was
you.
fun. Happy Monday. Make it a great week, everybody.